Global financial markets are grappling with unprecedented volatility from crypto to crude. First, let's address the significant movement in the cryptocurrency space. Bitcoin's volatility resurfaces as price dips to $80,000. Bitcoin has experienced a sharp decline, falling to $80,000 and erasing nearly 25% of its value this month. This significant drop is largely attributed to increasing market volatility and a broader sell-off, putting immense pressure on market makers navigating an already fragile trading landscape. This matters because such volatility highlights the inherent risks associated with cryptocurrency investments, impacting not only individual investors, but also the stability of the broader crypto market infrastructure, especially for institutional participants. Looking ahead, investors should exercise extreme caution. The market could see further price consolidation or increased swings as participants reassess their risk exposure. Monitoring institutional sentiment and upcoming regulatory developments will be crucial indicators for future direction. Let's move to our second story, which delves into international diplomacy and its financial implications. G-20 tensions. U.S. and South Africa clash over joint statement. South Africa recently asserted that the United States reversed its position on issuing a joint statement at the G-20 summit, the first ever held on African soil. However, the White House has publicly denied this claim, following earlier warnings to South Africa against advocating for such a statement. This diplomatic friction is significant, as it could complicate international relations and potentially hinder the effectiveness of multilateral forums like the G-20 in addressing critical global financial and economic challenges. It also reflects underlying geopolitical tensions that often spill over into economic policy. The outlook suggests that this incident could strain U.S.-South Africa relations and potentially influence future G-20 agendas, particularly concerning consensus building on global issues. Observers will be closely watching for any long-term diplomatic fallout. Finally, our third story impacts global energy markets. U.S. sanctions threaten to strand millions of barrels of Russian oil. New U.S. sanctions are projected to leave an estimated 48 million barrels of Russian oil stranded at sea. This aggressive move aims to further restrict Russia's energy revenue, significantly impacting global trading dynamics and forcing buyers to fundamentally reconsider their sourcing strategies. This development matters immensely as it could severely disrupt global oil supply chains, potentially leading to heightened price volatility and necessitating a substantial reallocation of energy resources worldwide. It underscores the ongoing geopolitical weaponization of energy and its far-reaching economic consequences. In the short term, the situation could tighten global oil markets, potentially pushing prices higher, and accelerate shifts in energy trade routes and international partnerships. Companies involved in oil shipping and trading will need to adapt swiftly to evolving compliance risks and market uncertainties. In summary, we've covered a volatile cryptocurrency market, with Bitcoin's sharp decline, diplomatic strains within the G20 impacting international cooperation, and significant disruptions to global oil supplies due to U.S. sanctions. For investors, it's essential to watch the continued stability of the crypto market, monitor evolving international diplomatic relations for their impact on trade and policy, and carefully track how sanctions affect global energy prices and supply chains. Drop your thoughts in the comments, and if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.